You know what banks don't want you to know about buying your first house in Florida in 2026? They make more money when you choose wrong. Quick note, this is Jeremy McDonald's AI twin. Jeremy personally writes every script and reads every message you send. He's helping home buyers, homeowners, investors, and real estate agents across Florida and 48 states. Now let's pull back the curtain. I've been in the mortgage business since 2003. Started at big banks. Watched them push people toward loans that made the bank the most money, not the customer. And the number one place they do this? First-time homebuyer decision between FHA and conventional. A first-timer walks in with a 580 credit score and 5% down. The bank says, "You don't qualify for conventional. FHA is your only option." Truth, that's not always right. The reason they say it is because FHA loans have an upfront mortgage insurance premium, called MIP, that gets rolled into your loan amount. That MIP is free money for the lender on day one. In this series, I'm going to break down the real difference between FHA and conventional in 2026, what each one actually costs, which one is actually right for you, and why your credit score and down payment aren't the prison sentence the banks are making them sound like. Next, I'm diving into the actual numbers of an FHA loan so you can see where every dollar is going. DM me START to begin your pre-qualification journey. Okay, so banks push FHA because it makes them money up front. But that doesn't mean FHA is bad. It just means you need to understand what you're actually paying for. FHA loans are government-backed mortgages designed for first-time buyers. They're insured by the Federal Housing Administration, which means if you default, the government pays the lender, not you. Because that insurance exists, FHA lets you in with a lower credit score. 620 gets you approved. Some lenders go lower depending on down payment and other factors. Here's what an FHA loan costs you in real terms. Down payment, 3.5% minimum. On a $250,000 house, that's $8,750 down. Upfront mortgage insurance premium, 1.75% of your loan amount. That gets rolled into what you borrow. On that $250,000 purchase, the upfront MIP is $4,200. So you're actually financing $245,450. You're paying interest on that $4,000 fee for the next 30 years. Monthly mortgage insurance, 0.6% of your loan balance, divided by 12. That's about $123 a month. And here's the thing, you pay that for the life of the loan. It never goes away. Total monthly payment on that $250,000 FHA at 6% interest, roughly $1,800. That includes principal, interest, insurance, taxes, and homeowner's insurance. Now let's look at conventional and see how it actually compares. DM me numbers to see if you can qualify for a better path. Here's where banks get sloppy with first-timers. They assume conventional is off the table for you. It's not. Today, we're talking about the 3% secret. Conventional loans are not government-backed. They're held by private lenders or sold to Fannie Mae and Freddie Mac. The credit score requirement is usually 620, same as FHA. But here's the difference. Conventional loans let you put down as little as 3%. On that same $250,000 house, that's $7,500. That's actually less than FHA. Your mortgage insurance on conventional is called PMI. And here's the key difference from FHA. PMI goes away. It's not a life sentence. When you build 22% equity in your home, PMI gets eliminated. On a $250,000 house, that takes about 7 to 10 years depending on your payment. Then it's gone forever. PMI costs vary by credit score and down payment. With a 580 credit score and 3% down, you're looking at about $180 to $200 a month. But again, that's temporary. Total monthly payment on that $250,000 conventional at 6% with 3% down, about $1,820, only $20 more than FHA. So FHA is $1,800. Conventional is $1,820. The difference, $20 a month. But the conventional loan loses the insurance after 7 years. The FHA loan never does. So which one is right for you? That's where it gets interesting. Next, we're going head-to-head to help you make the final call. DM me choice to see your personalized projection. All right, so we've covered what each loan actually costs. Now let's talk about which one you should actually choose. It's time for the head-to-head showdown. Choose conventional if you can hit 3% down, your credit score is 620 or above, and you plan to stay in the house longer than 7 years. This is where you win long-term, because after 7 years, your PMI drops and you're paying pure principal and interest. That's the conventional edge that builds real wealth. Choose FHA if you absolutely cannot hit 3% down. You're at the very edge of qualification. or you're planning to refinance or move within 5 years anyway. If you're not staying long-term, the upfront MIP doesn't matter as much as getting approved and getting your foot in the door of your first home. Last month, I helped a teacher in Jacksonville with a 580 credit score and $4,000 in savings. She thought she had to do FHA. She thought she was stuck. I ran the numbers both ways. Conventional with 3% down and down payment assistance actually came out cheaper than FHA. Why? Because down payment assistance programs in Florida cover that 3% for you. She got into a conventional loan, no out-of-pocket down payment, and she'll drop PMI in 7 years. FHA would have meant mortgage insurance for life. That's the secret banks don't mention. They don't push conventional with down payment assistance because it doesn't generate as much upfront MIP revenue. They prioritize their profit over yours. So how do you actually figure out which one is right for you? That's next. We're building your personalized 2026 action plan. DM me CHOICE to see your numbers today. We've covered FHA, conventional, the real costs, and real examples. Now here's exactly what you do next to get into your first Florida home. Step 1. Get pre-qualified and run the numbers both ways. I'm not talking about a soft pull that takes 2 minutes online. I'm talking about a real pre-qualification where a loan officer pulls your credit and runs scenarios. Most first-timers can qualify for conventional with down payment assistance, and that usually wins. But some can't, and that's okay. FHA is there. The point is, don't let a bank tell you before you actually know. Step 2. Make sure whoever is quoting you understands Florida first-time buyer programs, down payment assistance, Fannie Mae HOME Ready, Freddie Mac Home Possible. A lot of lenders don't even mention these. We do them all day. I've been in the mortgage business since 2003. As a broker, I've got access to over 240 lenders. That means I can shop your loan to find the best program, the best rate, and the best terms. We offer a $1,000 lowest rate and fee guarantee. If you find a lower rate with the same terms somewhere else, I'll beat it or write you a check. We're laser focused on your win. We're laser focused on Northeast Florida, Jacksonville, St. Augustine, all of Duval, Clay, and St. Johns counties, and we've got bilingual Spanish-speaking loan officers serving all Florida markets. So whether you're local or anywhere in the state, we've got you covered in your language and on your timeline. We move at the speed of your business. Here's your next move. Click the link in the description. Fill out the application, takes 5 minutes, or reach out directly. Email, text, or call. The info is right there, no surprises, just honest numbers. You've got this. Let's get you into your first home in 2026. I'm Jeremy McDonald, and I'm ready to help you build your legend. See you at closing.